indicators, all kinds of different things. And I give you the Oxen Group's approach to all kinds of different types of investing and trading strategies. And today, we're going to be looking at how to identify winning earnings trades. So coming into earnings seasons, obviously a lot of people are going to be looking at, what companies can beat earnings, what companies can really move into their earnings announcement stage, which companies could really, surprise and move up extraordinarily after earnings. I think everybody, wants to find those really awesome earnings trades. And so today we're going to be talking about that. We're going to talk about what are earnings trades, some of our basics for identification. I'll look at an example, and then we'll also see how we use earnings trades at the Oxen Group. So what's an earnings trade? Well, basically, these are just, obviously, as we said, trades that work during earnings season that look for movement in stocks based on earnings expectations, past earnings expectations, or future earnings expectations. And we're looking for stocks that are going to make significant movements into earnings, or maybe out of earnings, or both. And there's something to be said about the amount of movement that a stock can have before earnings even happen. I think too many people look at, okay, I want to identify that stock that can make a great surprise and then move up 20% after earnings. Okay, that's very hard to do, right? What's not as hard to do, and that we've been able to find a sort of system and master it here at the Oxen Group, is how to identify those trades that are going to move 3 to 5% before they even announce the earnings based on expectations. First off, what we want to look for is we want to look for stocks that are going to have growth of earnings. So we want companies that are going to grow in the amount of earnings per share they're going to have. When a company is able to grow their earnings per share, they're going to reduce their price to earnings ratio. I think one of the, probably the key value indicator is price to earnings ratio that your average retail investor is going to look at. And what it means is as that E part of the equation moves up, the price to earnings ratio drops. So the only way for that ratio to get back to where it was what? For the P portion, the price to increase, thus increasing the value of your stock. We want to look for companies that PE ratios already lag competition or lag after reports come out. So we want to find companies that have not made significant movements to the upside already and priced in that earnings growth. So a company with a PE ratio that's well above its competitors, or a company that has moved up, 5-7% already when we're taking a look at this company, may not be the best option for us because it's already lost that value. It's already priced in that earnings. One of the things that we see traders and investors do is get their hopes up on a company that's breaking out, it has a lot of momentum, maybe a few days before earnings, okay, and it moves up. It's already moved up 10% in the last week. Well, you already probably have priced in an earnings jump. The second it reports earnings, people are always like, well, they beat, but then they drop down 2%, or they beat and they didn't continue up. Why is that? Well, part of every equation has to be value. Is there more value now? Did the company do what people expected? Did they outperform what people expected? We could take out that equation completely by identifying winning earnings trades before they even report. Let's take an example of a company that we bought last week and moved up tremendously before earnings and probably has more movement ahead of it. Complete Production Services. This was one of our top 5 picks for earnings season on our Equity Analytics earnings preview report that we just put out. That's available today for all of our trial members, all of our premium members, and all of our basic members. And if you are not a basic or premium member right now and you would like to see this report, sign up for a trial today. You can get access to this report. It gives you your top 5 picks for the whole entire industry, your top 5 large cap picks, our top 5 mid cap picks, our top 5 small cap picks, our top 5 most overvalued stocks moving into earnings season, and our top pick for every single industry. We did a lot of work on this report, and you're going to be able to see a lot of great stocks that are going to be able to take some major movement into earnings. And this was one of them. So you see Complete Production. Part of every pick is identifying a buy based on the charts. Okay, we picked up Complete Productions on this day here. This stock broke through this moving average. We weren't even looking at it yet. And when it hit this moving average right here, which is its 50-day moving average, that was a buy signal. This is a company that is about to report over 1,000% increase in earnings per share. This is a company that's in the energy sector, drilling, their exploration and drilling. So in a sector that's had a lot of success in quarter 1, as oil prices increase and demand continues to increase for oil. So this is a company well set up to move into earnings and was at a great value. Even going further into this, you hear some of the earnings for complete production. So you see, this is the average estimate. This is courtesy of Yahoo Finance. This is the average estimate that the company has, 0.50. 1 year ago, they were negative 0.04. So that's going to increase their earnings per share drastically overall and reduce that price to earnings ratio. And you also see they're going to see 58% increase in revenue, and they've surprised 1 year ago by 71%, after that 400%, 35%. They did miss last quarter, but that was a quarter when a lot of, or actually energy companies, did not fare as well as they expected. So looking at more into the valuation of this company, we find that CPX price to earnings ratio is at 27.79, and it's going to drop to 18.52 given if it would hit those estimates. Okay, how does that compare though? That's a big drop, but if it was already well overvalued, then this is a company that we're not too interested in. Well, you look at some of their their closest competition. RPC, for example, it sits at 23.64 right now. Halliburton at 24.45. Baker Hughes, on the other hand, at 36. So CPX is kind of in the mix, in the middle there. Here's the key, though. After this earnings report, CPX is going to be at 18.52. Well, these same three companies, RPC will be at 18, Halliburton at 20.75, and Baker Hughes at 29.57. So the company definitely at the low end of their competition. So they're going to be lagging competition. So we see a company that's about to increase earnings drastically, move from a loss to a profit, increase revenue significantly, and it's lagging its competition in its price to earnings ratio. Now, obviously, there's a lot of other factors that go into that, with your debt, your free cash flow, everything across the board. How is the company future? How have they performed in the past? All this. But you look at those numbers, you see pretty consistent, significant beats on the upside. A company that is drastically below where its competitors are. An RSI at 52, which is a little bit overvalued, but if you look at the rest of the energy sector, they're sitting between 60 and 70. So with the company's earnings a few weeks away, and we start to move into a lot of these earnings coming out, this is a company that we could definitely see moving a lot to the upside as they try and move probably into that 21 to 22 future price to earnings ratio. I would not be surprised to see this company go to about 35 before earnings come out even. And after earnings, if they can beat significantly, then it gives even more. Now, as the company moves up, I would say right now the company still has upside, even given if they were just going to hit consensus. If they're able to beat, the company can move even more to the upside. And there's other indicators that are going to help you out. One of the things that you want to look at, if you're looking at companies' inter-earnings season, so right now we're looking at just what could happen, right? But once we start to get some numbers out there, I think that's when we can really find some great value plays. You can look at a company that you're looking at and they're reporting, and they've already had maybe 3 or 4 companies in the industry report. Those companies have all beaten by 30, 40, 50% on top of what was expected. Well, if this company hasn't reported yet, all the competitors have were beat by 30, 40, 50%, and they are undervalued compared to other companies on the charts. You look at your RSI. You look at where is it trading in its Bollinger Bands. Look at those webinars. If you're confused about those two things, we got webinars on Bollinger Bands. We got webinars on RSI and what they can tell you, and then you look at how do they compare on price to earnings? How do they compare on these things to those companies that have already reported? Did they move up significantly, or is there still a lot of value left in this company? If it is, it's a company that probably is going to get some buying interest into earnings because people are going to start to price in that expectation of a beat before it actually happens. You could also look for analyst upgrades and company upgrades. So maybe if you see, we always like to identify stocks that have company upgrades before earnings have actually happened, or have happened in the last month. That tends to tell you that institutions are behind this company. They probably see something that is very bullish about this company, and if the company is undervalued, it's going to move up. Same thing with the company already upgraded their earnings for their company. If they upgraded their earnings expectations. As always, the charts will allow you to time things properly. you see a chart that looks very positive, okay? You see a company, at the bottom of right on a moving average, at the bottom of its Bollinger Bands, expecting big growth. This is probably a company that you can bet on that's going to have some movement into earnings. And that's going to do it for how to identify winnings earnings trades. If you have any questions at all about this webinar or would like more advice about how to identify some winning earnings trades, please email us at contact@theoxengroup.com. We'll try to get back to you as soon as possible. If you'd like to check out our full report on earnings season this year, this quarter, and some of our top trades, you can kind of see that we analyze the companies. You can see what we're seeing, and we can flesh out some of these ideas even further. Visit us at www.theoxengroup.com. Sign up for a trial membership today. Not only will you get access to that report, but you'll get access to all of our trades, all of our ideas, all of our long-term ratings, all of everything we've got to offer for 10 days for free. No charge, no obligation. Try us out. Call us at 1-800-709-1160 for more information.